Welcome back to Theya. Today we are here with a very special guest, Fred Krueger. He's an investor and math PhD from Stanford. Fred, thanks so much for your time today.
Hey, thanks a lot, Joe. Appreciate it.
Absolutely, for sure. So let's dive right in here. For viewers who might not be aware, you have a very interesting Twitter account. The content you put out is really top tier. First and foremost, I'm wondering how you got involved in Bitcoin initially. I suppose you're asked this question quite a bit, but I think it'd be valuable for the viewers.
Yeah, look, I got involved. I've been in Bitcoin forever, right? Since 2013, on and off, right? So I got involved. I didn't take it seriously. I bought some in 2013. I sold some in 2013, right? And got back involved a little bit in 2016. Again, not serious. Didn't take it seriously. Thought it was just like a trading thing. And I really kind of got Bitcoin religion in 2019. And I was involved in crypto. I was involved in this EOS thing through a wallet. So I built a wallet at one point for EOS. And when the EOS blockchain came out, and I built this wallet that became the leading wallet for EOS called Lynx. And I was sort of the opinion back in 2018 that, faster, better. It's all about consumer, adoption type thing. And I didn't understand the concept of Bitcoin, why Bitcoin was at all special, right? Like I had this vision that Bitcoin was this kind of slow, boring. It was the MySpace, and there would be the new Facebook, and why should I spend too much attention on that, right? I think that's a lot of tech people have that narrative, and I was one of them. I came from the tech startup background. I've started and sold 10 tech companies for a lot of money, right? So I've had 10 exits for over $10 million each. Total number of exits is $500 million. So I've made a bunch of money in tech, right? And I, just as a tech person, you have all the wrong instincts towards Bitcoin. So, you're like, okay, this thing is slow. It's hard to use. Nobody's ever going to adopt this thing. And, in 2019, I had the chance to hang out with Tom Lee of Fundstrat, and he kind of convinced me that this was an investment store of value for millennials. And I was thinking, and I was like, you know what? I think you're right. I think this newer generation who is now going to control all the money, they don't want to invest in the S&P 500 anymore. They don't want to invest just in tech stocks anymore. In fact, they don't want to invest in stocks at all. They want to have this newer asset that's perfect for the millennial generation. And that asset really is Bitcoin. It's crypto broadly, but it's really Bitcoin. And they love the idea that, okay, you can't screw around with me. It's 21 million. I can hold it in my iPhone. I can go live in, Paraguay. I can work from anywhere. And I don't have to deal with a banker or a broker or any of that. And this is just this perfect asset. So I said, oh, you know what? I got to start taking this really seriously, and I got to, and I got to put my money to work, right? So so I got the religion then, and really it stuck with me that time, So I think it's not so much how early you get in, it's how much conviction you got, and I would say I got a lot of conviction, right? And then, I got in before Saylor, right? I got my religion before Saylor, right? 1 year before, right? So, and as Saylor shows, it's when you get in, it's like how much conviction you have, right? So I got a lot of conviction, and and I've since had even this very even amount of conviction that this is the right asset. This is the asset that's going forward. And, and I just came out with, when this ETF thing hit, I was sort of not known on Twitter. I didn't really have any interest in Twitter. And then I just sort of made one video because I was sort of like, guys, you have no idea how good this ETF is for Bitcoin. Like this ETF is going to be great for Bitcoin. Not that Bitcoin needs the ETF. Bitcoin would do okay without the ETF, but I said this is going to accelerate things a little bit. And so I jumped on, made a couple of videos about how I was ultra bullish about this ETF. And it was sort of not the consensus view at the time, when I made those videos. It was sort of a lot of people were going around saying this is don't pay attention to the ETF. It's like self-custody only. And I was like, guys, like time out, This is going to bring a lot of adoption. It's a good thing. So that's kind of, and then I sort of, I think the combination of a different perspective on Bitcoin, coming from a Bitcoiner, but coming also from a finance guy, I think that different perspective kind of just boosted my Twitter, really fast. And I'm not only talking about ETFs now. I'm not specifically talking about it, but I'm a new voice in the Twitter sphere. So that's kind of where I am. And so my only interest is Bitcoin. I just want to comment on Bitcoin and be a cheerleader for Bitcoin to some extent. And I think I have a little bit of a different perspective than some people on Bitcoin, just because I have a very unique background. I've got this sort of tech background, like Saylor, right? But I also have this finance background. I was on Wall Street in a prop trading desk for 6 years. I know that world cold, and I also, I also have a PhD from Stanford, and I'm a math guy, and so I take a very sort of, and look, I've not just read through the white paper, but like I proved all the math of Satoshi that's in the white paper, every single number. Like,
how many people can do that?
Yeah, I mean, it's just, well, it's not easy stuff, to be honest. Like, I'll tell you, if you really want to understand kind of the math. So, for example, in the white paper, right, you have this idea that, let's say somebody's trying to take over, and push through a double spend, right? They've got to compete now with all the other honest miners, right? So what is the probability that they can kind of clear ahead, even though they don't have, control of the hash power? Well, it sounds pretty simple, but it's actually not. This is like a problem in Gambler's Ruin in sort of advanced probability theory. And, I looked at it and then I saw his reference, which was Feller Volume 2. And I was like, ooh, okay, that is one of the, I actually, hold on a second, I'll show you. Yeah, so this is Feller Volume 2, right? Wow. And, this is not a simple textbook. This is one of the hardest textbooks that I studied in graduate school at Stanford, right? And I remember, I studied my first year of grad school, but I got to tell you, this book, and a lot of these books, they have these deceptively simple titles, so they call it Intro to Probability, right? Like probability for beginners. Let me tell you, this book is not probability for beginners. This is a very tough book. And the fact that Satoshi references this book, I'm like, okay, solid. This is, everything Satoshi did was sort of like very, very understated, But, and then I was like, okay, let me check all the math. Okay, yep, he's right. Mm-hmm. Poisson distribution. Mm-hmm. Yep. So I'm very, very, the more I looked at all the innards of Bitcoin, I'm like, wow. This is sort of the canonical solution to this problem, and I kind of feel like, as a math guy, who's proved mathematical results, the hard ones, I feel like Bitcoin is the proof of a mathematical result.
Extremely well said. Well, in your short time on Twitter, you've managed to gain quite the following, but you've also managed to tweet out some pretty prolific stuff, one of which I'm going to read right here, and then I have a chart to go along with it, and I want your thoughts on it. So you said Yesterday, at some point, Peter Schiff will be right. Nobody will want dollars. Interest rates will be sky high. Inflation will be out of control. However, at that exact point, nobody will want gold. It will be Bitcoin only. And alongside that chart, I have gold, alongside that tweet, rather, I have the percentage returns of gold and Bitcoin over the last decade adjusted for M2. And it seems to me, just from an unprofessional eye, that Bitcoin has performed the job of gold much better than gold has. Talk to us about why, in the future, when people decide they don't want dollars anymore, they'll want to hold Bitcoin. Why are these two assets whose monetary properties are relatively similar, why is one so desirable over the other?
Okay, so first of all, the chart that you really need to look at, okay, is the chart of Bitcoin denominated in gold, right? Which you can look at, right? And you'll see that the chart of Bitcoin denominated in gold also is up to the right, okay? Now, if you look at that particular chart on a log-log basis, you'll actually see that Bitcoin is a power law relative to gold, okay? So Bitcoin is growing, even though we see Bitcoin over time growing relative to time, it also grows relative to gold, just equally steady, okay? And at a power of 4.7, actually, that's the number, right? So it's almost to the 5 power. So Bitcoin is crushing gold. And why is it crushing gold? And the answer is it has two properties that gold does not have, right? So like gold, it's scarce. I would say it's evenly scarce to gold. People right now are saying, well, Bitcoin is scarcer than gold. Yeah, whatever. Both are hard, right? You can't find gold nuggets under trees, and you can't find Bitcoin under trees. You know, it's very, very hard to produce a Bitcoin. It's very hard to produce an ounce of gold. But Bitcoin is much easier to move than gold, right? Gold, you can't move it that easily across an ocean. You can't move. You have to physically go get it and move it. You can't even fly in an airplane with a lot of gold. You have to declare it, et cetera, et cetera. So the ability to move Bitcoin is a key advantage. The second key advantage is that it's much easier to secure Bitcoin than it is to secure gold. So, with the multi-sig wallet, like you mentioned, you can very safely secure gold, right? That's a great graph, right? So that's the Bitcoin to gold, XAU graph. So with a multi-sig wallet, you can very easily secure a Bitcoin, but securing $1 million worth of gold is a lot trickier. I mean, would you put $1 million worth of gold in a safe deposit box?
Not if I was Russia holding it in the United States.
Even if you're in the United States, are you going to put? If you look at the security of some of these safe deposit boxes, like you take an average Bank of America safe deposit box, you've got somebody managing that box who's making $15 an hour, $20 an hour, right? And your $1 million is at the mercy of some guy checking your signature who's making $20 an hour and is looking at your ID and checking your signature, right? It's not super, super high tech security. So, a multi-sig is so much more secure than a safe deposit box with a few bars of gold in it, right? So the security aspect and the ability to move Bitcoin are the two key advantages that Bitcoin has over gold.
And it's clearly showing itself in the price. I mean, you see this chart, and it's pretty well illustrated there. So,
yeah, I mean, those are really two killer. I mean, those are the killer advantages. Like, it's not something that the gold guys are going to find a solution to anytime soon, right? So this is literally the automobile versus the horse, right? This is a better mode of transportation. I didn't take a horse to the office yesterday. I took my car, right? So you don't see a lot of horses in the streets anymore.
You don't. Very well said. So you talk about the power law very frequently, and you just spoke about it there. What other aspects of Bitcoin can be modeled with the power law? And I suppose taking a step back for viewers, what is the power law?
Okay. Well, the power law is all it is a statistical relationship that we observe that Bitcoin has. So, if we look at the price of Bitcoin, most people, when they look at the price of Bitcoin, they have the following perception. Okay, it went up a lot in 2017. I remember that. It went up from 1,000 to 20,000. Then it crashed all the way down to 3,500. Then it went back all the way up to 60,000 in 2020, and it stayed at sort of 60,000. It double dipped, and then it crashed again, and here we are back to that new all-time highs. But if you look at it on a log basis, right, which you've done there, right, you've looked at this is on a linear to log basis, right? So you have linear times linear, and the basis is log. Now you start seeing some pattern in it, right? It does look like it's generally going up. Now, if you look at it on a log basis, where the time is also put on a log, you will notice that it's now going up in a line, right? So it's not just going up sort of in a logarithmic curve. Like this would sort of indicate that it's sort of bending down this way, right? But if you look at it on the log space, you'll see it's actually linear. And that log relationship means that Bitcoin is growing at a power of time. So the equation is, yeah, exactly. So if you put things in a log space and you see a line like this, and you see that it is trending around a line, which it is, right? And it also happens to have peaks at the line and troughs at the line, but that's not even the critical part here. The critical part is that it is trending around a line, right? And it has, the red area is 2 standard deviations above the line. The green area is 1 standard deviation below the line, okay? And that's just an observed behavior, right? So we've observed that it doesn't ever go below 1 standard deviation of the below the line. Do you guys know what maybe I should say what a standard deviation is, right? So in a normal distribution is defined by 2 criteria. It's defined by its mean, its average, right, and its standard deviation. And here we have a pattern which is a mean. The mean is growing linearly with time, okay, here. And the standard deviation is, right now it's 0.3 on this thing in log space. And what that means is that you can either go up by 10 to the power 0.3, which means it's a double. That's 1 standard deviation. Or you can go down, you multiply by 10 to the power negative 0.3, which is equivalent to a cutting in 2. So sort of over a year, the best way to think about this is we might double or we might go down by half in a year. Now, it's not the same to say over a long period of time, this thing tends to have some mean reversion to it, right? So if you're at one of these kind of bubble peaks, you have a higher probability of correcting back down towards the middle. So it's not sort of a memoryless process. It is a sort of a mean reverting process. So this power law tells us a lot about if in fact this is the correct model of Bitcoin. And the statistical data here is really strong, right? So as a person with a stats background, I can tell you don't see stuff like this in anywhere, right? With this kind of correlation. This is really, really, really rare, right? Like when I saw this for the first time, I was like, oh my God, And because you don't see this kind of behavior. ever. And why this is so special is that you'll notice that it's starting at 10 to the minus 1 here, which is 10 cents, right? And it's going all the way up. And this was an earlier version that stopped in 2020, but of course now we're almost up to 100,000, right? So we're up to 10 to the power 6, right? So we really have gone, we've got, sorry, 10 to the power 5. So we've gone up 6 orders of magnitude in this chart, right? And the fact that you've gone 6 orders of magnitude and still stayed within the power law is just, you know, earth-shattering, kind of like a discovery. So, I was, you know, I and others have observed this power law, and the first person to observe it was this crazy Italian physicist Giovanni, who observed it in 2014. Nobody gave him the time of day, and everybody instead focused on stock to flow, which is a little bit of a version of this. I don't want to go too far into stock to flow because it's not really a great model, to be honest. And even
what did it get wrong relative to the log scale here?
Well, the log version is kind of why it works, right? So this is the fundamental reason why it works. Now, stock to flow, what it is you're the stock of Bitcoin is it's sort of, by definition, it's a function of time. And so it's just a mathematical function of time, just because the the emissions of Bitcoin are programmed, right? So it's because stock to flow is a monotonic function of time, it's correlated to time. But since the price of Bitcoin is correlated to time with the power law, it therefore follows that stock to flow will also be correlated with Bitcoin price. So there is some correlation, right, that we're observing. So the correlation of stock to flow, which led everybody to say stock to flow is right, comes from the fact that there was this power law. What they got wrong is that there was this implied causality between supply and price, which is not correct, right? And so, you know, and it is not correct that the fact that the halving reduces the supply by half logically implies that the price has to double. That's just not correct, okay? And it is obviously the case that if you have a reduction in supply, that is good for the price of Bitcoin, but it doesn't logically follow that the price of Bitcoin should double. So, you know, that's kind of and it's just, you know, we could go into a long discussion as to why I believe that, but basically the way I think that me and many others, right, are coming to the view that what we have with Bitcoin is we have a model where Bitcoin is getting adopted more and more and more in a very steady way, right? So you can see how many people have 1 Bitcoin, for example, right? And that number is also a power law with time. So the number of whole coiners is growing to the power of 1.4, as it turns out, okay? That's the power of you can also look at how many people have $1,000 worth of Bitcoin. And that is growing to the power 4. So that's a power law too. You can look at how many people have 1 million sats. Okay? That's roughly a power of 3 to the of Bitcoin of time. So there's all these power laws which stem from the fact that Bitcoin is getting adopted. Why? Because it's better than gold. It's more movable than gold. It is more securitizable than gold. And of course, it has the same hardness of gold. So you've got these 3 key assets that make Bitcoin a very useful product for many, many people on this planet. And so because of that, overall, Bitcoin is growing. And it's growing at this rate. And the price is also growing at a faster rate. Now, it may be the case that Metcalfe's law is also at work, where the number of users is growing at, say, the cubed, and then Metcalfe's law takes that to the squares that, so that the power is multiplied by 2. So that gets you to power 6, roughly. But the main thing is usage is growing according to a power law, price is growing according to a power law, and also hash rate is growing according to a power law. And I think that's a very good mathematical model for how Bitcoin is working today.
Extremely
Now,
well said.
that may change 20 years from now, right? It may change 10 years. A lot of people have said, Fred, the ETF is going to change it this year. And I'm said, listen, I'm going to be and change it to the upside, right? People are like, this ETF's going to we're going to go to $1 million a year this year. Now, if that happens, great. All I can say is we've lived through 15 years of data, and we're very, very tightly within this power law. I would say as a statistician, I'm saying unless I see otherwise, I would expect the next 15 years to resemble the last 15 years. And if that's the case, I would expect Bitcoin to go up by 64 times over the next 15 years. And that's the number, right? So, and this is where it's very hard to get your head around, right? But in a power law, if you double the amount of time that you give the process, right, you don't double the price. So, you know, in another 15 years, you don't double the price from 64,000. What you do is you take the price to the 6th power, 2 to the 6th power, 64, because the power law is roughly a power of 6. So something like somewhere between 32 and 64 times, you know, that would be the statistical behavior of Bitcoin that we would expect in another 15 years. So it's amazing, right? And I believe that's probably roughly right? So do I believe it's exactly right? No. You know, it's a model. Mm-hmm. But it gives you some mathematical framework to look at to make some estimations as to where we think Bitcoin's going to be.
Absolutely. And there are plenty of factors that are working in Bitcoin's favor. At the same time that there are factors working against Bitcoin's favor, we have of course, in Bitcoin's favor, we have the monetary and fiscal situation in the United States. It's really accelerating the adoption of these hard money assets. But we also have, like you mentioned, these ETFs. And right now, there was more Bitcoin purchased by these ETFs yesterday on net, factoring in what was sold, than what was produced. 469 Bitcoin purchased. You've made some tweets about this. What are your general thoughts now that these participants are in the market?
Look, I mean, I think that my general thought is that we have a new audience for Bitcoin, right? Which is the average American, right? The average American investor has now put some of their retirement savings in stocks, okay? So the average American owns S&P 500 through 1/3 of new money goes into the one fund, which is the Vanguard S&P 500 fund. That's 1/3 of all the money that's coming in. But Americans also own, you know, FANG stocks. They own Apple. They own Google. You know, so Americans own stocks. They don't own Bitcoin generally, right? So. And the reason they don't own it is it's a little complicated to own, right? So, you know, if you're going to put, you know, 5% of your money in Bitcoin, to do that right now, it requires a lot of steps, right? You got to go to Coinbase, you got to go KYC, you got to do all this stuff. That's a lot of work for just 5% of your portfolio for the average person, right? And let's say the average person the average retirement account has like $100,000 in it, right? So they're going to do all that to invest $5,000 in Bitcoin. Seems like a lot of work, so they don't do it. But now we've made the barrier so easy that they can jump in and they can get some exposure to Bitcoin through these ETFs. So this is a really big deal, I think, from a point of view of enabling access to Bitcoin for a lot of people. And I do fundamentally believe that this is sort of the gateway drug to self-custody, right? So if you start this way, you eventually want to actually own Bitcoin and use Bitcoin, right? So,
you see the price
send
appreciation
Bitcoin.
side of things, and you want to start using it the way it was intended.
Yeah, I mean, look, there's a lot of different ways to Bitcoin, right? But I think you kind of got to have some skin in the game, first of all. And, owning Bitcoin through an ETF is perfectly acceptable, right? It doesn't mean you have to own it there, or, you have to own it there as opposed to self-custody. No, it's just, this is, for most people, this will be the first exposure they get to Bitcoin, right, in America. And now with Hong Kong starting ETFs in a week, right? We are going to see now people in Hong Kong who have the same thing. They're going to buy Bitcoin for the very first time. So I think this is a really important step in Bitcoin, and I don't think we've seen anything yet. Yes, it's true we're already buying the supply, but that's sort of like it's just the very beginning, right? I think this thing could really mean that there's just a massive audience for Bitcoin that just didn't exist before. So it makes, I like to look at the forest and the trees. Like, the trees are, they're buying some Bitcoin, hopefully, it won't go down further, or there won't be this selling. The forest is, we got this major new class of investors. We got all this money printing, right? And the reverse of that is we got all this money that was printed, right? So there's always a reverse to everything. So the fact that the Fed printed all this money means that that money is sitting somewhere. And where is it sitting? It's sitting in bond funds. It's sitting in equity funds. It's sitting in real estate. That's speculative real estate. So all that money can now compete to get into Bitcoin. So, money printing is not necessarily, I mean, it's a good thing for Bitcoin, right? Because it means that there's all this money that can now move. Some of it can compete to get these 21 million coins. So I think the macro picture over the next 10 years, it's not good. It's just great. It's amazing, right? It's just like, and especially for somebody your age, it's like, a lot of people come to me and they're like, Fred, you guys had it lucky, you boomers, because you could buy these houses. They were so cheap back then. And I'm like, guys, what are you talking about? You're the guys who have it lucky, because you can buy Bitcoin right now at below 70,000. I mean, like, everything, my generation, we had to like plunk down 20% down, we had to tie ourselves up for 30 years in these mortgages. And, and I made one tweet where it was sort of like Bitcoin versus real estate. I said, if you're a millennial right now, and the average home buyer in America is 36 years old. I said, like, okay, let's just say you're a 36-year-old couple, right? Now you have a choice. You can go buy that home. The average home in America costs $500,000 right now. You can buy 500, and you can put 100 grand down towards a down payment, or you can buy, 1.3 Bitcoin with your 100K, right? And you could rent. Now, renting is going to save you money. Your mortgage is going to be higher priced than your renting, right? So you're going to be able to take a little bit more off the top and stack that as well. So if you look at this and you sort of model it out with a reasonable power law or Kaggle type assumption, you're going to end up with like 2 Bitcoin in 10 years if you rent and you put your money in Bitcoin. Now, if you have 2 Bitcoin in 10 years and Bitcoin's at 1 million, you're going to be way better off with the 2 Bitcoin than by having paid down, 100K off your 500K mortgage. Long term, this is a long-term thing. You got to do some long-term planning. But like, if you're a millennial, you actually have an amazing opportunity right now. Now, 98% of the people will not take that opportunity. It's just a fact. They're going to do the wrong thing. You can always count on people to do the wrong thing, because they're going to follow the trend. They're going to follow the herd. And the herd says, buy the house, settle down, plunk this, like that's what the herd says. But you have to go the other way. If you want to get rich, if you want to do better than the average, you have to do something different than the average. And so I think, I encourage, younger people to say, yeah, your best bet right now is to put all your eggs in Bitcoin. That's your best bet. And if I was 30, that's 100. I would have 100% of my net worth in Bitcoin. That's what I would do. Maybe not 100. Maybe it'd be 80, and then I would keep 20% just in cash, just for a rainy day in case I lost my job or I get hit by a car, right? Just so I wouldn't have to sell my Bitcoin at a bad time, So, but predominantly in Bitcoin, and then play it out. So look, I mean, there's a lot of noise on these flows, and everybody can get too obsessed with what were the flows yesterday or what are the flows today. You can read too much into these flows. Like when I started, I sort of looked at some of the flows daily. Then I realized everybody was looking at them very, very almost in too much minutia. And they were like, wow, there's flow, it's unstoppable. I was like, guys, like, this is, Wall Street are momentum players, right? They, if the market feels toppy or goes down or something, they're going to be the first people not to step off the gas, right? And this is what happened, right? So they stopped for a while. Now, market's going to come back somehow. We don't know when. We don't know how this stuff's going to happen. But market's going to come back. But now we have this huge market that can participate on the upside, right? So this is a temperamental buyer, just like anybody else. But it's just, the good news is we now have this pool of capital, which is 10x what it used to be. And that's just great, right, for Bitcoin. And that's what's going to propel Bitcoin to that. That we need that pool of capital if we're going to get to 500,000 Bitcoin this cycle, which I think we will. But we need the massive volume of capital, and we now have that. So we don't need anything else. We don't even need sovereign wealth or corporates to put it on their belt. Nothing. We've got the thing. We got the ETF, and we got BlackRock supporting it.
Because just like you said, most 70% of wealth that's going into 401ks goes into SPY, and then you also have gold, which saw it was below $200. ETFs were launched. Now it's $2,400.
Yeah, but look, how many people do you know who actually own gold?
None. Well, a couple, but functional.
A couple. Okay. I mean, what I'm saying, how many people do you know who own stocks through Robinhood or something else?
A great deal.
Probably most of the people you know, right? They don't have to own a lot, but I would say most everybody that you know owns some stock. Maybe $100, but they own some. So I just don't think gold's even relevant to this discussion. Like, to me, the question is, how do we get all these people who have money in Robinhood? How do we get all these people who have money in traditional brokerages like Schwab? And how do we get those guys to start allocating 1, 2, 3, 4, 5, 10% to Bitcoin, right? And that's now going to happen. We don't have to do it. The good news is we have a professional sales force now doing that. We have Fidelity doing that. We have BlackRock doing that, right? So, it's sort of a little bit like, thank you, plebs. You did your job. Thanks. We'll take it from here, And that's a little bit what's happening. And, it's honestly, it's not a bad thing. We can still focus on the multi-sig side of things, and we can focus on Bitcoin, the network, and Lightning, and all these other. There's a lot of stuff for people to focus on, but Bitcoin as an investment, BlackRock's going to do a great job of that, right? They can pitch that far better than any of us Bitcoiners can do.
100%. And I know we're tight on time. The last question I've got for you: you've been on the timeline recently talking about Bored Apes and Ethereum and crypto. I personally like to put crypto in quotation marks wherever possible. And here is the chart of ETH BTC. Pardon my French, but I like to call it the shitcoin electrocardiogram. because similar to the Bitcoin to gold chart that we showed earlier, it kind of shows, asset dominance relative to the other. And clearly the market is pricing in what it values more. What's your thoughts on this chart and where all the other stuff, is going?
I mean, look, I think all this other stuff is going to survive, and it has its role, right? I just don't. To me, it's like this. One of the things is going to become global money. It's ultimately going to replace the dollar, okay? There's only one candidate for that. That's Bitcoin, right? That's it, okay? Everything else can compete for like being a transport layer for Bitcoin, and doing smart contracts and all this other stuff. And you can do ETH, you can do Solana, you can do Avalanche, you can do Sui, you can Aptos. So there are going to be a lot of these things. There is, and they're going to be. But, ETH at a third of the value of Bitcoin, to me, is preposterous, okay? This thing should be 5% of Bitcoin, right? That's kind of where it belongs. So I don't like this chart at all. If I was in ETH, I would get out very quickly because, you've had a you're lucky that you're here, right? You're lucky that you're here. And honestly,
you sputtering like this kind of seems like life support.
Look, the patient's not going to go flatline, but I don't think the patient's going to die. I don't think ETH is going to die. Okay, but it's just going to trend lower forever. It's the number's going to go down forever, Laura, and that's what's going to happen to ETH. So I don't, just to me, this is just a not. And most people don't even understand why Bitcoin's better than ETH. So do your homework, understand why Bitcoin is the only replacement for money, and why that's the market you want to be in. You don't want to be in number 2 fighting for these L1 wars. You just don't. Not a bad, I'm not, but ETH can exist. It's fine. It can exist. I'm not saying it's bad. And they've done, there's a lot of stuff there, and smart contracts and lending and all these other stuff. They're all useful, except I think they'd be useful for trustless wrap Bitcoin as the asset that there should be moving around, not ETH. So I'm negative on these crypto things. I just don't even think it's like part of. Really, it's not. 5-10 years from now, it won't even matter. They'll have sort of forgotten them. It'll be like, whatever. It's like a database layer. That's a good way to think about it. Is just, this is a database on which you're keeping track of things. And, to the extent that people use this database, it's like AWS. To the extent that people use it, it has value. Data. This is like a hosted version of MongoDB or something. It's useful. I mean, it might be worth a couple $1 billion. It's not worth $100 billion, $300 billion, or whatever the market cap of ETH is. So a lot of these things are just very, very overpriced. And I think Bitcoin's very underpriced relative to how transformative it's going to be in society. So, I think it's very simple. Buy Bitcoin, hodl. If you're going to buy some of these other ones, keep the percentage down. Everything it's all about how much you do, right? You can smoke a little pot if you want, right? Smoking pot every 5 minutes, generally not a good idea, right? So it's all a question of like percentages, and I just think that you just want to keep whatever you're doing. If you approach this cryptocurrency world, you really got to start with the idea that you're going to put 80 to 90% of your money in Bitcoin. And whatever you want to do for the remaining 10%, like if you want to buy a Bored Ape, I happen to not like Bored Apes, but if you want to buy a Bored Ape, I like CryptoPunks, I got to tell you. But if you want to buy, I just don't like the aesthetic of Bored Ape, right? So to me, it's like, if you want to go buy them, great. Is it going to outperform Bitcoin? Unlikely, who knows? Maybe you're going to be buying the next Andy Warhol. That's possible, right? But, for every Andy Warhol, there's a bunch of art that just goes absolutely nowhere, right? So in general, it's a very tricky investment. So I wish you guys well with your Bored Apes, but you know, I'm not feeling threatened, or I'm not coping because I don't have any. And I do love art, and I think art on Bitcoin is a great idea, but I love it as a diversion. You know what I mean? Like it's not the main story. Like this is so the main story here. Let's just focus on the main thing. The main thing is we've got new world money here. It's going to solve everything. Money printing. It's going to solve, you know, the Cantillon effect of people being too close to the money and just getting rich. It's going to solve all these other people trying to cope up with trying to get their wages higher so they can fight with inflation. So it is true that Bitcoin will solve everything. You know, it will make the world a really much better place. It's also true it's probably going to take 20 or 30 years to do. So, but you know, you don't need to buy it for ideological reasons. You can just buy it because it's going up. And you know, I think all these things are true. And I think we just got to be very, you know, we have to be patient, right? The one thing is, you know, if we get caught up too much in the minutiae of this, you know, we're going to go nuts. And part of the reason I'm on Twitter a lot is almost like a form of therapy, right? It's like a group therapy. You know, it's like I do these spaces and stuff, and it's like, look, at the end of the day, am I going to sell Bitcoin no, I'm not going to sell my Bitcoin because of like some war between Israel and Iran. There's no chance I would sell my Bitcoin, right? Am I going to sell my Bitcoin if it, you know, suddenly goes up to 100,000? Also, no chance. So really, what am I doing? I'm just venting. That's called. I'm just venting, and I'm just, you know, exuding energy. And at some point, I'm going to, you know, I'm just passing time, and that's really all I'm doing. So
thanks so much, guys, for joining us for this episode of the podcast. If you want more, make sure you follow, like, and subscribe if you're watching this on Twitter or YouTube. And, of course, follow Fred on his socials at @Krueger. It's going to be linked in this video. And just like he said, Bitcoin is superior to gold because of your ability to take it with you. It's superior security. And he mentioned multisig. Theya has created the best-in-class multi-sig solution for everyone. We're democratizing it. It's a very simple app on your iPhone, 2 of 3 multi-sig solution. It's never been easier to take your Bitcoin into your own custody with best-in-class security. So check it out. Download it for free on the App Store. It's linked in my bio. It's linked in the Theya bio. And let us know what you think of it. We're always improving, adding new features as the weeks and months go on. It's going to be a big summer for us, so make sure you stay tuned to this podcast and also follow the Theya account for all of the product updates that we have in store. But that's all for today, everyone. Thank you so much for watching. I'll catch you later.